conversation. That's what Joe does. What is Rumble?
Rumble is it's like a platform. If you ever been on Twitch, like a live stream platform,
Hmm.
very
There's like
similar.
there's Kick or whatever it's called.
Yeah, Rumble's bigger. It's like a little bigger, I
Mm.
think. Kick is by a streamer, Rumble's by it's like a public company right now.
I
They
mean,
go
live
public under a SPAC.
live streaming makes a lot of money. I mean, if you look at how Twitch started, like it started with just on TV, and then they got I think they got a lot of VC funding, and I mean, people are making millions. I mean, if you looked at like peak Ninja in like 2018, like that guy was making a lot of money.
You see, like when Twitch got all their stuff released, like they got hacked. Like streamers are making millions a month.
Yeah. Dude, what's
Hmm.
his name? I mean, XQC's making millions. I mean, I think he moved platforms, but I don't know. But like, there's so much money in live streaming and media. It's crazy. And then you can just do like live brand stuff where you just have like ads on the screen and you can just make so much money. Do you guys think like social media is going to continue just to be like the largest, like, I don't know how to say this, like, just continue to be like the largest money maker for creators?
Uh, I I mean the ways to leverage social media I think are huge money makers, but like the social media platforms, I think it's very I don't know the word saturated is the word I'm looking for. It's like a few companies. Like I don't think it's gonna like it's very hard to like create a social media platform and get the user base. So I think like it's just gonna get more and more saturated, I guess.
Think saturated is a
Yeah.
perfect word. Saturated is a perfect word because if you look at stuff like threads, I mean, the way Zuck has just been copying everything, and of course you have to copy things to stay competitive, but threads is just the same thing as Twitter, and it just makes social media just like kind of saturated. I mean, if there can be new platforms that are like trying to form different communities and are inputting different functionality that's new, that's great. But I think companies like Twitter and Meta are just doing the same thing, and it just gets really boring.
Yeah. But the less amount of platforms, the easier it is for the user. So it's another point.
Alex, what were you gonna say?
I was just gonna say that I think for creators themselves, streaming is so much easier. Like it's you live stream for 2 hours and that's your content. But for like YouTubers, they don't make nearly as much for the time they spend because they have to like film, edit. Like I think that streaming will be the live streaming will be like for content creators the main sort of money making.
I mean, with live streaming, it's just like you can record for 2 hours where you're just doing whatever you want because you already have that fan base who are gonna watch you stream. They don't care what you do. And then you can take that, save the VOD, and just like clip it into smaller segments, and then you have like a week worth of content to post. So live stream
Yeah.
is just one of like it's so easy to do, and it just produces so much content for you.
Yeah.
Um,
I mean, I don't personally, I agree with you there. I don't think like live streaming by itself, it's so hard to grow as a streamer, I think, especially nowadays. But I think short form content like TikToks and all that stuff is really the way to leverage. I mean, like we saw South Park, and this is super random, take off like with all the short form clips and Family Guy, same thing on TikTok. So like those short clips that you're seeing like converted a lot of users to watching like a longer form of content. So I think it's really about how much you can leverage that short content in order to convert people into watching your live streams or watching your show or whatever it is.
yeah, I really find the dichotomy of long form and short form content really interesting because it's something we do because we take our longer videos like this podcast and we just cut it down onto our TikTok link in bio, and we get more views with the shorter form content. And I wonder in the future if content will get shorter and shorter and the long form content, if something like film will be as popular or if short form content will dominate the future as people's attention spans just get shorter. But, but I did want to go more into saturation. I don't know if saturation is the perfect word. But this week it was a Reuters article that said the biggest market caps in the S&P 500 are doing well, while other companies in the S&P 500 aren't doing as well. What do you guys think is the main factor in that, and what do you guys have to talk about that?
I mean, if you watched our previous content, we did have a little bit of discussion on this topic about how the top whatever 10 or so companies in the S&P are the reason that the market, it's a false reality in which all companies are doing well, which necessarily is not true. It's like these top 10 companies, Amazon, Google, Apple, all Nvidia, all those companies, they're doing extremely well, but the small guy, I think, is really often forgotten in the pattern. And I think it was a really good point there, connecting that with saturation, because I think we've seen it's so hard to compete with these big cash cows that just milk every industry that they're in and just destroy, these smaller companies in the industry. And that's why we're seeing these companies, keep on going up and up, while we see largely flat on the smaller market caps companies.
Yeah, I mean, I think Pierce said all there is to say to it. I think a big thing in the stock market is people were really disturbed. I don't know if disturbed is the right word, but they were like a little bit uneasy with the market. And going back to these big, reliable cash cows, it just was one part of it. I also think that they're starting to just dominate every field. We're seeing companies like Microsoft, right? Not only do they have like their computers and consoles, but now they're going into like OpenAI. Like they're just dominating every single field. And I think that's another reason why we're seeing these big market cap companies doing so well and the smaller ones are kind of suffering.
Yeah, I think the market, as you noticed, in March, it was just fueled by fear because of all the regionals. And now, as the AI boom came in, everything is just about greed, and everybody's just thinking that the economy is going forward. If you disagree with that, look in the S&P 500 in the past 3 months. The market is fueled by greed. Except, is that greed justified? Who knows? Jay Powell does not think so. He says that we're going to have more 25 basis points increase in the next couple of Fed meetings. But yeah, I think I'd like to talk more about the Fed bump. What do you guys think is the main reason that Jay Powell wants to increase raising Fed rate?
I think he's afraid of what happens if he doesn't raise enough. I mean, job layoffs are slowing down, which is a good reason to bump up basis points. People have money. I think also, I think he doesn't want people to really think that the situation we're in is good. I don't think much has changed since March. Of course, like the banks aren't failing anymore, but those are small regional banks. I think like the buy up is crazy. And as you said, it's all greed. And Jay Powell knows it's greed. And so I think when we do see the 25 basis points, the market will tank quite a bit. And I think people are trying to call his bluff. And I don't think Jay Powell's bluffing.
I mean, at least for me, I think this run up has been a little bit more like reasonable than the last run, because I think the companies that are performing well, Nvidia, Amazon, all these companies, for example, like they have actual like earnings to back it up. I think in the previous run it was a lot of hopium, specifically in like the SPACs, and all these companies that were set to no profits, but it's set to explode in the future. So I think this run is a little bit more fundamentally fundamentally like better than the previous run. But I agree. I think like we're still in a time where the economy is very strong, and inflation, if Jay Powell doesn't increase these rates, is going to increase pretty rapidly.
Yeah, I think generally the economy is pretty strong. I mean, I think Alex started to go into the layoffs. There was 500,000 jobs added in the private sector last month. I mean, economy's doing well, no matter if that's because of the AI boom or just because inflation's going down. I think going forward for the next couple of months, we'll continue to see layoffs ease, and hopefully that'll result in an inflation ease and a Fed rate ease. Yeah, what do you guys think about that?
I think initially Jay Powell might take that as a reason to raise. I think though, economically and for Americans, I do think that it's really good what we're seeing, and it's a good trend. But stock market wise, good news can be bad news and bad news can be good news when you're looking at straight stocks. I do think Jay Powell will continue to raise, and I don't think he'll stop until he's happy with what he's done. And I think that's 25, maybe 50.
Yeah, I'm not really sure, but I know from Jay Powell's previous patterns, he's pretty in favor, I think, of maintaining like a pretty strong economy. I mean, that's kind of where he's been in the past, specifically during COVID and like all that pumping in money into the economy. I think he's for not overdoing rates, not taking too much of a crazy approach on it, where like inflation is a huge issue in his mind. But I think it definitely is still an issue in his mind. He's definitely considering it.
Yeah, I don't see inflation being a big problem as much anymore. I think we had those recession fears early in the year, and nobody's talking about a recession anymore. I think everybody's pretty strong. That not strong. Everybody's pretty confident in the market for the next couple months. Yeah. I'd also like to start talking about VC funding. VC funding has been down. It's been down for this half and for the last year. Initially we saw it with Web3 and crypto and NFTs. VC funding was up. Everybody was getting checks. If you had half of a company that was relating to crypto and Web3, you'd get $1 billion. But now in 2023, nobody's getting any money. What do you guys think it's going to take for VC funding to get back to where it was?
I think we're really gonna have to start seeing the smaller companies, the Russell in particular, perform significantly better than it has right now. I mean, there's no reason for a company to go public right now, and if you're a smaller company in this environment, just because of how brutal the market is treating these smaller caps. That's what I think personally.
Yeah, kind of building off peers. I think the reason it's down, we talked about, and was it our first episode, second maybe? We talked about it, and I still think it has to do with the fact that they don't want to put money in at the valuation that companies are asking for, and to them, it's uncertain, right? But they can just wait. Like, why would they want to put in money right now when they can always just wait? If there's a really good idea, they're going to put money into it. But what we saw was mediocre ideas were being funded, and now there's not really, it's not a good time to do that. Kind of what Pierce was saying about like the small caps is not doing that well. So I think they're just waiting, to be honest.
Yeah, and I think we do have to wait a little bit. I think because I've had this year started off with the recession and with the regional banks, there was not a lot of liquidity in the market. And now we have to wait for another year and a half for that money to come back to VC so they can actually start funding things. I think there are like decent ideas going on, but like, I mean, we have AI, now we have AR, maybe now we have socials because of threads. But it's probably going to take another year or another revolution of like something like AI for VC funding to really get back to where it was. But yeah, I want to talk more about like the recent trends in startup revolutions. So first we had AI, and then Apple released the headset, and then we had AR, which kind of lasted a little bit. Do you guys think with the release of Threads that we'll get like a kind of social media startup revolution?
I don't personally. I don't think there's going to be another social media revolution with Threads. I think Threads was specifically built as a counter for Twitter. I think that's the only way to put it. I think that's how Elon put it. That's how everyone's kind of viewing it. It's basically just a Twitter that Instagram runs. And Instagram has more data on people than Twitter, so they could probably run it better. And that's what I think Threads is. I don't think it's really a revolution of any kind. I don't think there's that much new technology involved. I think it's kind of just, copy paste, the old fashioned copy paste and make more profitable.
I agree with Pierce. I also think that, as we said earlier, it's the market's kind of the social media market is saturated. I don't see many ideas being able to come from this, and I do think it was just Twitter copied.
I think it is saturated. But if you can create a good community on a social media, I think whether it has the right functionality or the right UX, that people will use the app. And if you can continue to create new and engaging communities that people enjoy being in, I mean, what is the Threads community? It's a cross section between Instagram and Twitter. Who wants to be at a middle part of Instagram and Twitter? I don't want to be there. There is no clear community with Threads, and with Twitter has had its own identity. Facebook has had its own identity. Instagram has its own identity. Each social media platform has its own identity, its own community. And if you can't just copy and paste communities, it takes time to not replicate, but form new communities. And I think with new social media platforms, you have to create a new identity, a new brand that creates a new community. So I think if people want to, if there is going to be a kind of social media revolution with startups, there has to be a level of community building in mind for those new apps. I've heard of new apps like Blue Sky and, well, there's Threads too. But the thing about these apps is that they're just trying to beat Twitter. They're not trying to create a better community. And I think behind every great social media, there's a great startup community, not startup community, but a great community on the social media. And if you look at how Facebook started, it started with a very strong college community and then it went out. If you look at how Twitch started, it started with Justin TV, a very small community of people who are watching this one guy stream. And then it created more streamers, and then it created a whole streaming community. So how every strong social media starts is by forming a strong community.
Yeah, I agree with that. I think that's a very like good point. The one thing I would say is I think those platforms were all created, in the previous decade. And I think at least the 20s have, whatever we want to call this decade that we're in right now. I think the message behind this decade has been let's make it as easy as possible for the user to get from one platform to the next. I mean, TikTok took off because it was just so, it's not like TikTok has a really good community. It's more like, it's just so easy to use. So I think like the easier an app makes it for the consumer, the easier or the more successful it's going to be as well. I think that's another point to kind of bring up in that discussion.
I think I like your point where it's not so much about creating new communities now. It's just with the whole recommendation system and algorithms, it's in-app finding different communities. Originally with not startups, with social media companies like Facebook and MySpace and Friendster, it was each app was a different community. Now with social media, it's each app has different communities, and you find your own community in that app. And I think I'd like to see now with the new technologies we have and new functionalities that are capable in applications for there to be new communities on different platforms. So with something like, yeah.
Oh no, you go on. Sorry, I thought you were done.
I am done. What are you gonna say?
Okay. I have a question for you. So do you think that if a social media company wanted to, start or like a little startup social media company, would they want to go after like a specific audience? Or do you think it'd be better for them to try taking in like big audiences? What do you think, like in our day and age, like they want to go for engagement and different audiences, or just really have a good community and build?
So what Paul Graham says, and Paul Graham is with Y Combinator. He says, make things that don't scale, make things that are for a certain community, are very niched. And once you get monopoly over that one community, then you can expand outwards. That's what happened with Facebook. They started with college communities, just kids on Harvard. They captured that small community and they went out and they went to more schools, and then they went to high schools, and then they went for countries. So if you want to start a startup, then you have to get a small community of people who love your app and need your app, and then you can start branching out. But if you're trying to capture an entire market super quickly, and I think that just goes for like content creation too. If you're posting to a certain niche that's really big, imagine you start trying to post on video games and you want to like get the whole CSGO community to like your videos. Like nobody's going to look at that. I can just go to a bigger company or a bigger creator and watch their videos. So when you're starting something like a social media page or a startup, you need to capture a small community first, monopolize that community, then go to a bigger community and then scale up. So yeah. Next thing we're going to talk about is we already talked about layoff easing. What else do you guys want to talk about?
We just share our thoughts on, let's hear whether everyone's bullish or bearish right now in the market.
I mean, we talked about it earlier. Like, it's just a very greedy market. I think markets were on a downturn on Friday because JPow started talking. And anytime JPow talks, the market tends to go to hell. So I think going forward this week, we'll have a pretty good market unless, well, I think it'll stay the same.
Yeah, I'm kind of neutral. I think it's hard to predict short term, but as Warren Buffett said, sell when there's greed and buy when there's fear. Or I think it was Warren Buffett. So I wanted to remind you guys of that. But I do think the market will be neutral throughout the week.
Yeah, I think there's a lot of I agree. I think there's a lot of greed out there right now. So I would recommend right now, like from my personal perspective, I'm not getting like any bullish, any like I'm not really buying. I wouldn't be buying the big mega caps right now, or even the smaller caps. I think the market right now is overvalued. I think it's always overvalued in a way. If you look at it like from a really in-depth perspective, there's always a case for it to being overvalued. But there's also, I think a stronger case right now that the economy is doing well. All the things are going good for the market. So there is that bullish case. But so I'm with you guys. I'm kind of neutral. Uh, I don't think there's much to be excited. I don't think there's much to be scared about either.
Yeah, I don't think you should be doing any buying right now. I mean, I think stocks are really overvalued right now. Look for value stocks that you think are going to keep on growing and that are at a good price right now. Um, yeah, unless you guys want to talk about anything else, I think that's
Anyone have any positions? Any positions that they're like looking to maybe short or looking to buy in the future?
I mean, personally, no. I think it's so greedy right now, but again, like the market's not made up of straight technical analysis. It's on people's emotions and it's hard to read emotions. And when there's so much greed and the technicals are so bearish, it just kind of like it's not a good market to be in like big positions, in my opinion.
all right. I think that wraps up the 11th episode. We took a 1 week hiatus, but we're back now. Watch out for the next episode.